Stop what you are doing for 30 seconds. In 2026, Medicare Part B premiums jumped to $202.90 per month. That is $17.90 more than last year. For a married couple, that is $35.80 disappearing from your Social Security check every single month. $429.60 per year. Gone, automatically, without anyone asking your permission. But here is what almost nobody knows. There is a one-page form that can reverse this increase, legally, permanently, and often within 60 days. Do you have a pen nearby? Because you are going to want to write something down. Now I want to ask you a question, and I want you to answer it in the comments right now. Do you know exactly how much you are paying for Medicare Part B every single month? Type your amount below, because by the end of this video, you will know whether you are paying more than you legally have to and exactly what to do about it. My name is Linda Marsh. I have spent 13 years as a certified financial counselor working exclusively with Americans navigating retirement. And in the past several months, I have had this exact conversation with more clients than I can count. Today, I am going to show you exactly why Medicare premiums went up, who is being overcharged and does not know it, what the one-page form is and how to use it, and how much money you can get back and how fast. Let us start with why this happened. Medicare Part B covers your doctor visits, outpatient services, lab work, and certain medical equipment. It is one of the most essential parts of your healthcare in retirement. Every year, the government adjusts the Part B premium based on projected healthcare costs. In 2026, that standard premium rose from $185 to $202.90. That is a 9.7% increase. To put that in perspective, the Social Security cost of living adjustment for 2026 was 2.8%. The average beneficiary received about $56 more per month. Medicare immediately took back $17.90 of that. For most people, the increase is automatic. It is deducted directly from your Social Security check before you ever see it. You do not get a bill. You do not get a warning. The money simply disappears. And for a large group of retirees, the increase is even larger than $17.90. Far larger. Let me explain why. There is something called IRMAA. That stands for Income-Related Monthly Adjustment Amount. It is a surcharge that Medicare adds to your Part B premium and your Part D prescription drug premium if your income exceeds certain thresholds. Here is how it works. Medicare looks at your income from 2 years ago, not your income today, your income from 2 years prior. For 2026, Medicare is using your 2024 tax return. If your modified adjusted gross income in 2024 was above $109,000 for a single filer or $218,000 for a married couple filing jointly, you are paying a surcharge on top of the standard premium. And the surcharges are significant. At the first income tier, $109,000 to $136,000 for single filers, you pay an additional $81.20 per month on top of the standard premium. Total Part B premium, $284.10. At the second tier, your total Part B premium jumps to $394.60. At the third tier, $499.10. At the fourth tier, $603.60. And at the highest tier, for individuals earning above $500,000, your monthly Part B premium is $689.90. For a married couple, those amounts double. Now here is where this becomes critically important for many of you watching this. The income Medicare is using to calculate your 2026 premium is your income from 2024, 2 years ago. A lot can change in 2 years. Maybe you retired in 2024 or 2025. Your income this year is dramatically lower than it was when you were working, but Medicare is still charging you based on your old working income. Maybe your spouse passed away and your filing status changed from married to single. Maybe you reduced your work hours significantly. Maybe you sold a property or had a one-time capital gain in 2024 that pushed your income into a higher bracket, but your income has returned to normal since then. In every one of these situations, Medicare is calculating your premium based on a number that no longer reflects your reality. And in every one of these situations, you can ask Medicare to use a different number. That is what Form SSA 44 does. Form SSA 44 is called the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form. It is one page, it is free, and it allows you to formally request that Medicare recalculate your premium based on your current income rather than your 2-year-old income. The Social Security Administration defines the following events as qualifying life-changing events for this form: retirement or a significant reduction in work hours, the death of a spouse, marriage or divorce, loss of income-producing property, for example, if you sold a rental property or a business, loss of pension income, employer settlement payment, certain one-time payments from employers. If any of these apply to you and your income today is meaningfully lower than your 2024 income, you may qualify to have your Medicare premium reduced right now. Not in 2 years when the tax data catches up automatically, right now. Let me tell you about a client named Diane from outside of Atlanta, Georgia. Diane retired in March of 2025 after 31 years as a marketing director for a large company. Her income in 2024, her last full year of work, was $168,000. Based on that income, her 2026 Medicare Part B premium was $394.60 per month. But Diane's income in 2025, her first year of retirement, was approximately $42,000, Social Security plus a small pension. She was paying a premium based on $168,000 of income. Her actual current income was $42,000. When we filed Form SSA 44 together, we included her retirement date, her employer separation letter, and her estimated 2025 income documentation. Medicare approved the request. Her monthly premium dropped from $394.60 to $202.90, a reduction of $191.70 per month, $2,300 per year, all from one form. Now let me walk you through exactly how to complete Form SSA 44 and what you need. Step 1. Download the form. Go to ssa.gov and search for SSA 44. The form is available as a PDF that you can print and complete by hand, or you can complete it online through your My Social Security account. Step 2. Identify your qualifying life-changing event. This is the event that caused your income to drop. Write down the date it occurred. Step 3. Gather your documentation. You will need evidence of 2 things: your life-changing event and your current income. For retirement, you need your retirement date and a letter from your former employer confirming you have retired, or your final pay stub showing your last date of employment. For the death of a spouse, you need a copy of the death certificate. For income documentation, you will need either your most recent tax return, if it reflects your lower income, or a written estimate of your current year income if your tax return has not yet been filed. Step 4. Complete the form. It asks for your name, Social Security number, Medicare number, the life-changing event, the date it occurred, and your estimated current income. Step 5. Submit the form. You have 3 options. You can mail it to your local Social Security office, you can fax it, or you can bring it in person. If you call 1-800-772-1213, a representative can help you submit it over the phone or schedule an appointment. Step 6. Wait for the determination. The Social Security Administration typically processes these requests within 30 to 60 days. If approved, your reduced premium takes effect the month after approval, and in some cases, you may receive a refund for the months you overpaid while the form was being processed. Now I want to address something important. Not everyone qualifies for Form SSA 44. If you are currently paying only the standard $202.90 premium with no surcharge, meaning your 2024 income was below $109,000 for a single filer or $218,000 for a joint filer, there is no surcharge to reduce. The form only applies to people paying the IRMAA surcharge. But here is a group that absolutely should check this immediately. Anyone who retired in 2024 or 2025 after earning a higher income. Anyone who had a one-time high-income event in 2024, a home sale, a large IRA withdrawal, a business sale, but whose income is back to normal this year. anyone who lost a spouse in the past 2 years and whose filing status changed. If you are in any of these groups, please do not wait. Every month you delay is another month of the higher premium being deducted from your Social Security check. I also want to mention something about the 60-day rule. When Medicare sends you an IRMAA determination notice, the letter telling you that a surcharge applies, you have 60 days from the date of that letter to file a formal appeal. If you file within 60 days and your appeal is approved, you can receive a refund of the higher premiums you paid going back to the date the surcharge began. If you miss the 60-day window, you can still file Form SSA 44 based on a life-changing event, but you may not be eligible for the full retroactive refund. If you received an IRMAA determination letter and it has been less than 60 days, stop watching this video right now and go to ssa.gov. I mean that. The refund opportunity is time-sensitive in a way that almost nothing else in retirement finance is. Let me also tell you about the broader issue here, because Form SSA 44 is important, but it is only one piece. Medicare premium planning is something that most retirees never think about until they are already on Medicare and already being charged. But the decisions you make in the years before Medicare and in the early years on Medicare have a direct impact on what you pay every single month. The income Medicare uses for your premium is always 2 years old. That means the income you earn this year affects your Medicare premium in 2 years. If you are approaching Medicare age, if you are 63 or 64 right now, the income decisions you make in the next 1 to 2 years will determine your Medicare premium when you first enroll. Specifically, Roth conversions, large IRA withdrawals, the sale of a business or property, or any other one-time income event can push you into a higher IRMAA bracket 2 years later, often without anyone warning you. I have seen people do a Roth conversion in good faith, for perfectly good reasons, and then discover 2 years later that it cost them thousands of dollars in Medicare surcharges they did not anticipate. This is not a reason to avoid Roth conversions. They are often still the right move. But it is a reason to plan those conversions carefully, in coordination with your expected Medicare enrollment date and your anticipated income in retirement. Let me close with your complete action list. Number 1. Find out exactly what you are paying for Medicare Part B right now. Check your Social Security payment statement, your Medicare account at medicare.gov, or your bank account if you pay directly. Write that number down. Number 2. If your premium includes a surcharge above the standard $202.90, find out which income bracket triggered it. Your IRMAA determination letter from Social Security will show you this. Number 3. If you retired in 2024 or 2025, if you lost a spouse recently, or if you had any other qualifying life-changing event that significantly reduced your income, download Form SSA 44 from ssa.gov and begin the process this week. Number 4. If you received an IRMAA determination letter in the past 60 days, treat this as urgent. File immediately or call 1-800-772-1213 today. Number 5. If you are approaching Medicare at 63 or 64, speak with a financial advisor about how your income between now and age 65 will affect your initial Medicare premium. The 2-year look-back means your enrollment premium is already being determined by decisions you are making right now. Number 6. Regardless of whether you qualify for Form SSA 44 today, review your Medicare coverage annually during the open enrollment period from October 15th to December 7th. Your situation changes. Your plan should change with it. The standard Medicare premium increase of $17.90 this year affected every single person on Medicare, but the IRMAA surcharges and the opportunity to reduce or eliminate them with one form affect a much smaller group. And that group is the one most likely to be overpaying without knowing it. If you worked a good career, built meaningful savings, and are now in retirement, you are exactly the person this system was designed to charge more. And Form SSA 44 exists specifically to correct that when your circumstances have changed. Use it. If this video helped you understand your Medicare premium, please leave a comment below with the amount you are currently paying for Part B. It helps other viewers know what is normal and what is not. I will see you in the next one.